In this video, traders, we are going to look at what should you be measuring in your trades, apart from the obvious. Stay tuned. Hey guys, a very warm welcome to you. Alright, so what should you be measuring, or what could you be measuring? Listen guys, never advice on this channel, just ideas. You may pick or choose one or two bits from the videos and implement it into your trading, and if it can help you to become a better trader, then I'm all for that and I'm happy, and that's the whole idea of this channel. So make sure you subscribe guys if you're not already. Alright, so what should you be measuring in your trades? And most people are measuring P&L. The broker keeps a tab on that for you, doesn't he? He's going to say, hey, this is what your account value is. So of course, you're going to get your P&L, you're going to see that in your blotter, how much you've lost, how much you won per trade. So assuming you're doing that already, so what else can you kind of measure? I'm not saying you should do all of these things, but maybe you choose to pick and choose one or two of them. So the thing, guys, big thing is the risk you're taking per trade. You know, then you can start to understand your risk reward ratio per trade. So the risk you're taking per trade, the target you're taking per trade, or your final target per trade, and then the outcome of that generally. So let's say you're risking 50 pips, target's 500 pips, that's fine, but if you're always taking 100 pips, then you know that needs to be measured. You need to say, okay, my target's always 500, but I'm always getting 100. We'll come to that in a moment, kind of how we can quantify that a bit better, but now you can start to see your risk reward ratio expectancy per trade, or risk reward ratio, forget that expectancy part, just the risk reward ratio per trade. So you can then kind of work out a little bit more about what you're looking for and whether they fits into your category. And very recently, guys, I'm very strict about the risk reward ratio on my trade. I'm very specific about the risk reward ratio. I've got no tolerance over that. And literally yesterday, scanning through, love these charts. I was like, oh, these are great. I want to take them. Like, no, they just don't fit the risk reward ratio. The target is just not right. It's a good target, fine, but the risk is too much. Risk reward ratio is not there. So I know it's a non-negotiable for me. So understanding your risk reward ratio and tracking that and knowing the realism of the actual risk reward ratio, not just your pie in the sky target, helps you kind of measure stuff a lot better. And then we're looking at win-loss percentage. I don't think this matters so much, but it gives you an idea. Because actually sometimes you don't realize, sometimes your equity curve is going against, your equity curve is going higher and higher and higher, and until you do your stats, you think, well, actually my win-loss percentage is probably quite high, I'm probably doing all right. In reality, your win-loss percentage might be more like 60-40 winners, and just because your risk reward ratio is taking up the slack and you don't realize it. So in actual fact, you start to think, okay, well actually if I come a little bit better at picking, or maybe I can be a bit more aggressive, and you start to think about how you can adjust your strategy to leverage on the stats that you've got. So that's an important one. Or as I say it's an important one, but it does depend on the style you're trading. It does depend on your time frame, and depends on the market as well. Number 4, guys, is time in trade, winners and losers. I think this is a nice one. I like to see how long I'm going to trade for winners versus how long I'm in for losers. This is different for everybody, but some people might find that their biggest losers, they're in the longest because they're hoping it comes back, They might find that the winners are shorter, in which case you probably need to flip it. Maybe if you have then a time constraint on your trade and go, well, I've already been in there a day. Normally, anytime if I hold the trades more than a day and they're losing, they're down on the trade, they're normally bad trades. So then you can add a rule that says, hey, you know what? I've been in this trade for too long. I need to cut it. So you can start to think a little bit about how you can again adjust your strategy to suit some of the metrics you've got. The other thing is price movement after exit. This is a really good one, guys. This gets you thinking about your exit. So price movement after you've been stopped. Are you getting stopped out and the price is moving in your direction? If so, you need to adjust your stop moving forward. Maybe you need to make some adjustments, some tweaks, some entries or the stop or position size. Is it just going against you, in which case the stop is working well? What about your targets? So this is a good one, definitely for trying to improve your trading, extract more from it. If the trade is constantly going further and further and further after it's hit your target, maybe you need to extend your targets. What's happening after the exit gives you a clue as to how you can tweak things and make more money just by making a very small tweak, based on obviously the sample of data you're using. But if you see that, then you get a chance to adjust it and go, listen, I'm taking this after a 2-day move. In reality, most of the time it's moving for an extra third day in my favor, another week in my favor, or another day, or whatever it may be. So that's a really, really good one. Then you've got maximum adverse excursion, maximum favourable excursion, MAE and MFE. So maximum adverse excursion is how far the trade goes against you before it goes in your favour. So how much you're down for a maximum point. If that is way less consistently than your stop, in other words, let's say your stop is 100 pips and your maximum adverse excursion tends to be around 50 pips for all the trades you take, then your stop is probably too wide and you can afford to tighten up a bit and increase your position size. Then when it's maximum favourable excursion, how far does a trade go in your favour? So it might go in your favour by 500 pips, you end up taking 200 all the time. You need to tweak your exit a little bit to take profits a little bit earlier. If that's a consistent theme, by the way, you don't do it just for one trade, but if it's always doing that, then you might go, you know what, I'm leaving too much on the table, I'm letting it come back too far, I need to tighten up that trailer on, I need to kind of lock in more profit because my MFE is way more than I'm coming out with, so I need to tweak and adjust to deal with that. Other one is mindset. So how are you feeling about trades? What is your approach to it? Are you happy? Are you sad? Are you frustrated? You know, some of these kind of things, how did you do the prior day? You know, these are difficult to measure, but worth noting, because actually when you go back, you go, you know what, every time I felt like I didn't have much sleep, every time I was frustrated, I had a really rubbish day or really rubbish week. And so, you know, there's something to be done there. Conditions and strategy labels. So conditions are market conditions, uptrend, downtrend, range bound, spiking, volatile, whatever it is. Strategy label is, hey, I need to label each trade with the strategy I'm employing. Is it a pullback strategy? Is it a mean reversion? Is it a momentum ignition? What is it? So that when you review, you can say, hey, actually, this strategy is doing really well. This strategy is doing poorly. If I remove that strategy for now or worked on it, look how better my P&L would be. If I took the risk capital that I'm doing for this strategy and put it into this strategy that's doing well, all of a sudden my P&L will be way better. So these are using metrics that you've already got from your trades and trying to drill down and extract more from your current trading success. All right, guys, that's what you should be measuring in your trades. Keep your risk managed. I'll see you next one. Take care. Bye-bye.